Good morning. Yesterday, last discussion was on decision tree analysis. The next one is simulation, also called as Monte Carlo simulation. In your notebook, write down the heading simulation, also called as Monte Carlo simulation. Write a class note. This method of risk analysis this method of risk analysis uses random number theory uses random number theory. Therefore, full stop. Therefore, there can be different solutions. There can be different solutions in bracket depending on there can be different solutions depending on random numbers selected depending on random numbers selected. Yes. Now, in exam, then how are they going to value whether the answer is correct or not? As per the study material, they will give you which are the random numbers that you should try also. Therefore, though we said it's a random theory, random number based calculation, they'll tell you these are the 10 trials to be taken and then work out the solution. You'll understand without working a practical solution. The theoretical explanation won't help in this because it is a random number theory. I cannot explain a random number theory without some numbers, right? Now there is one big problem with this. How will we choose random numbers? We have to choose anywhere between 1 and 99. Basically time series 0, 1, 2, 3 up to 99. Now if we don't discuss and solve, we will have this many outcomes, this many answers, and each one of us have to at least do 5 simulations. One simulation means one sample run. Okay. If we do not discuss and try, we will have this many different answers. Accordingly, all our decisions will differ. Therefore, if there is a question on simulation, first check in the question whether they have given a random number table. Most likely they will give you, otherwise validator will find it difficult to check so many answers. You will get to know why I am saying this. Number one. Number two, how do we choose random numbers? There is no answer to this. How do we choose random numbers? You know the answer. I can start with 23, you can start with 41, somebody may start with 95. All of us are correct. Yeah. But manually, if we have to choose random numbers, then we may end up choosing only lower random numbers, because of which all our NPVs may be negative. You'll get to know all this. As of now, just I'm creating a base explanation. But if we decide to keep only higher random numbers, say 83, for above 60, 70, if you keep taking 91, 87, 83, 49, 53, 58, and then work out the answer, there is a greater chance you will have positive NPVs only in the answer. Therefore, manually selecting random numbers is very dangerous. Do you know you can create random number table in Excel? There is a formula. Yeah, correct. There are tools also which will give you just have to give them 1000 numbers and select the sample size. That will throw you use this in audit sampling. What will happen if you have to choose random samples? Tell me in audit. Let's start from there. Suppose there are 1,000 invoices in a month, and if I say choose any 10, you have to manually choose. What is the chance here? What can go wrong? It can be biased, correct? Or you may choose, suppose invoice number is starting from 001, 002 and ending with 999. That many invoices in a month. You may choose only 993, 995, 997, 999. And I can't say you are wrong also, because the name itself is random. In random, now he may choose only 003, 009, 011, 012. Therefore, it is better we don't manually choose these random numbers. But in examination hall, they're not giving us Excel sheet. They're not giving us a tool or software to pick up random numbers. We have to do it manually. But if we do it manually, our answers will also differ. Therefore, they will give you which are the random numbers to be taken also. This, all of this you will understand. Come to question number A, C, B. 13. You need to know one thing, that there can be more than one answer to Monte Carlo simulation related questions. K Limited is evaluating an investment opportunity that requires initial cash outflow of 1,30,000 rupee. Discount rate 10%. There are two uncertainties involved in the project, that is underline annual cash inflow and life of the project. Below is the summary of annual cash inflow and life of the project with their probabilities. Read. Annual cash inflow and probability. How much will I earn every year? By the way, how many years I will run the project also I do not know. Understand, there are two uncertainties. I may earn 10,000, there is 2% probability. I may earn 15,000, there is 3% probability, and so on. There is a probability of earning up to 40,000 also. This is one thing. Now you know outflow, first paragraph. You can take any one inflow. You also know the discount rate. Now to calculate NPV, you need to know the life of the project. These are the four things you need: year, DF, CFAT, and outflow. Outflow is already there, 130. Discount rate is 10%. Suppose if I take 10,000 as my probable cash inflow, the next question is how many years? And that is also uncertain. My project may run for 3 years, may run for 4, 5, 6, up to 10. Now you know how many combinations there can be. Just keep one number constant. I may earn 10,000, correct? Project may be for 3 or 4 or 5 or 6 and so on. I may earn 15,000. Project can be for 3, 5, 6, 7 and so on. Like this, these many outcomes are possible. Question is, using Monte Carlo simulation, compute the NPV. You won't get one NPV. If you do 5 runs, you'll get 5 NPVs. If you do 10, you will get 10. Now, how many to be done in exam? That will also be given in the question itself. And since it is random number theory, there is no answer as to only this many. You can do 7, I can do 3, somebody can do 25 also. If it is Excel sheet, we can do 300 also. Correct? Manually when we do, it takes a lot of time. Start. Solution to question ACB 13. Working note 1. Now go to the question. Which are the two uncertainties? 1. How much will you earn every year? Second, for how many years? That means first uncertainty is cash flow. Second uncertainty is life. Therefore, first working note will be allocation of random number range. This is the heading. Random number range for, which is the first item, cash inflow, in bracket annual I need about 5 columns. First column is value. Now this is available in the question. You also have the probability in the question. These two you can copy as it is first. You may earn 10,000. 0.02, 15,000, 20,000, and so on. This is to be copied from question as it is. Copy even the probabilities 0.02, 0.03, 0.15, and so on till the end. To make the calculations simple and easy, we multiply these probability numbers by 100, because when I say 0.02, what is the correct meaning? There is 2% chance, correct? So this will be now probability into 100. So this is 2, this is 3, 15, 15, 30, 20, and 15. Then we take the cumulative probability. Cumulative probability, that will be 2 for first line, correct? Next 2 plus 3, 5, 5 plus 15, and so on. Yes, 35, 65, 85, and 100. And then we assign the range. Starting from 0, this will be 0 to 1. Understand? It should be below 2. There can be only two numbers, 0 and 1. Therefore, next one will be 2 to 4. Understand how to assign? Basically this way. 5 to 19, 20 to 34. This is the way to understand. 35 to 64, correct? And so on. So last number has to be 99 basically. Continue still there. 35 to 64, 65 to 84, 85 to 99. This is the allocation of range for my first uncertainty. We need to do one more table for the second uncertainty. As per the question, second uncertainty is number of years or life of the project. So start again. Working note 2. Same heading, same calculation. Allocation of random number range. Allocation of random number range for life of the project. First, bring the values. Value here is 3. Doesn't matter rupee or years or days. Value, that's why we are not writing anything there. 3, 4, 5 up to 10 years. And the probability of this is also given. I'm copying 0.05, 0.1, and so on. Now probability into 100, this will be 5, 10, 30, 25, 15, 10, 3 and 2, Cumulative numbers. Then the range. Yes. Now the NPV calculation. Now from here till this our answers will all be same. From here this NPV calculation is based on random number. From here our answer may change if we do it differently. In class first we'll do 10 simulations, basically 10 runs with discussion. We'll all have the same numbers. After that I want you also to try 5 more without discussing, so you'll get to know how our biased trial selection, random selection can change our answer completely. Heading now, computation of NPV. Computation of NPV. Now, how many uncertainties you have? 2, correct? Therefore, first column. I need about 6 to 7 columns. This is a big table. First, random number for cash inflow or cash flow, you write. Random number for cash flow. Next column, cash flow. Random number for life. Next column, life. And then NPV. Listen to me. I'll show one trial, then you'll understand how we are going to do other 9 trials. Any 2 random numbers I need. One is for this and one is for this. And then I will go to that working note and find out in which range that particular line item is going to fall. And based on that, I will work out my NPV. Correct? Now, I can start with anything like this, say 57 and 93. There is no logic behind this. I said random table. So if I write 57 and 93, now what is the meaning of 57 for cash flow? Where am I supposed to go? My working note. Where do I have 57? 57,000 is here. I'm taking this. That means my relevant cash inflow is 30,000. This will now become 30,000. Second one, go to the life table. 93. This is how many years? 8 years. Right? Now you know in this trial, my project is for 8 years and every year I'm going to earn 30,000 rupee. Now, how do I calculate NPV? Do I know year 0 cash outflow, by the way? Minus 1,30,000, correct? Plus annual cash inflows will be 30,000. That is based on the trial that you have selected. And this is for how many years? 8 years. That means I'm supposed to do summation of discounting factor. Remember PV, AF, when you earn same 30,000 for 8 years. So this will be multiplied by PV, AF at, what is the discount rate in the question? 10%, 8 years. So do it in calci. Minus 1,30,000 plus 30,000 into, sorry, 5.35. Multiply that with 30,000 and then minus 1,30,000. Positive NPV is it? What's the number? 30,000. 050 or 048. First copy this. We will then discuss the other trials. In your notebook, write this: randomly chosen, this and this. Did you understand why I said this can be biased and wrong? Tell me, if you really want positive NPV, what you should do? Choose the highest cash flow range and choose the maximum life. Correct? Obviously, you will have positive NPVs. What if you don't want to do this project? Choose only lower number. 2 years project, 15,000 annual cash inflow. Surely you will have negative. Your outflow itself is 1,30,000 with 25,000 for 2 years. How will you make positive NPV? That's why I said manually we should never select these trials. And in exam, they'll give you run 10 simulations. We have done only one. Like this, you'll have to do 10. What if they don't mention? Then you go by the marks. They're giving 5 marks, you do only 5 simulations. If they're giving 10 marks, then you also do 10 trials or 10 simulation. Each trial is called each simulation. Yeah. Now I'll leave it to you, but we should do the same thing in notebook. Tell me, which are the next numbers? Can I take 31 and 45? 31. Go to the working note. Go to the range where you will have 31. Tell me, cash inflow is what? 25,000. And number of years? 6 years. Therefore, minus 1,30,000 plus 25,000 into present value annuity factor 10%, 6 years now. One approximately. I can now take 5 and 81. Five cash flows 20,000 for 81. Number of years will be 7. Anybody? NPV positive 640. Will then choose 75 and 95. Higher cash inflow, longer duration. 75, 95. So 75 will give you what? 35,095 will give you 9 years. You have 771 by 6 5 positive. One last we'll discuss and do. Take say 37 and 03. Five negative. Yes. I'll dictate another small classwork sum. I want you to do by yourself the whole solution with 5 trials. Now tell me in exam if they want to drag this question. What is one more thing they can do? They have given only two uncertainties: annual cash inflows and project. They can even give discounting factor like this. Discounting factor 8, 9, 10, 11, 12, 13, 14 and its probability. Then what will happen? You will have to have three things here: random number for cash flow and cash flow, random number for life and life, one more random number for discounting factor and discounting factor. For that you'll have to first do one more working note now, correct? Because in any project only initial cash outflow is certain, everything else is uncertain. Everything else has three numbers: annual cash inflow, life and discount rate. We did only two. They can, if they want to drag unnecessarily, they can make it one more. And in question in exam what they do, I'll dictate it, don't worry. After this they will even mention consider below random numbers, and they will give you a list of numbers, so all of us will have to try those only, and then answer has to match. Job is easy for the validator. Otherwise now itself you saw, every time I take a different number my answer can go wrong. And here also they won't mention 53 and 47 neatly. If they do, then we know 53 is first one, 47 is the second one. They'll give you a number something like this: 53476 8. Now you need first two digits for first working note, next two digits for next working note. You have to choose 53 and 47. Understanding? When will I use this 68? If I have third uncertainty, that is if discounting factor is also unknown, then I will use 53 for first working note, 47 for second working note, 68 for third working note. Understanding this? You can also do in Excel sheet. If you want to generate a random number of 6 digit, you have a formula. That means this is a suitable question in Excel sheet format than in paper pen mode, to be honest. Understanding? If they give 53 and 47, it's easy. If they say 5347, understand first two digits are for your first working note, next two digits are for your next working note. Sir, my working note order may also change. Doesn't matter, random theory. Understanding? So your working note need not always be cash inflow first working note, life second working note. I just went in the order because this came first in the question, this came second, third in exam. They can even give discount rate and probability 8%, 9%, 10%, 11%, 0.2, 0.3, 0.4, 0.1. That's all. So only four. Then you'll have to do one more working note now, cumulative into 100, and then you have this range now, 53 for first working note, 47 for the second, 68 for the third. And sometimes they say run 5 simulations and then they may give 10 numbers. Don't get confused. That means out of 10, any 5 you can do. My suggestion, first 5 you do. Again, no right or wrong here. If they say do only 5 simulations, they should not give me 6th trial. Just to confuse you, they may give. Anyway, they're not sitting and typing. Excel sheet does, you can just put a formula, copy from there and paste. Therefore, if they give 10, you take any 5. Better take the first 5 itself. Understanding? In study material, they have given one sum on this. They have given 40 trials. In solution, they have done only 10. Only first 10. So next 30 is needless printing actually. If they give 40 and ask you to do any 10, you can choose any 10 out of those 40 also. Then validator should have all the outcomes for 40, which I don't think they will do. If they do also, you go by first 5. Again, there is no standard answer. It need not be first 5 only. It can be any 5. Therefore, my guess is they'll give you 5 numbers and ask you to work out under only those 5 trials. One trial is called one simulation. How many trials to be done? That depends on marks. If it is 5 marks, you do 5. I did 5 only now. Correct? If it is 10, then you will have to do 10 trials. And we did only 2 uncertainties. There can be third uncertainty also. And then your random number will be 53 here, 41 here, and one more here. Now you know why we should not manually select these randoms. Then if I'm really busy in exam hall also, I will choose trials like this. Therefore, I know only 1 year project, only 1 year discounting. Why to do even summation for 8 years? This is the problem. If they allow you to do, you will only choose lower numbers. And tell me what will happen if you choose only lower numbers, all negative NPVs. Random, that's the meaning. It should not be subject to your bias. But if they say simple random, then it can be. Therefore, they should only print in the question. That is the most ideal scenario. If not, it's their headache now. Let validator also work out and give you marks every time. This many students, this many trials, how will they have a standard answer? Right? Then they should give a probability table to the validator also. Look, these many answers. If this is the combo, you take this as the correct answer, which is less likely to happen. Okay. Can you try one additional sum? Write down. Additional classwork. Practical application is gambling. You played housey. Can we use this there? You tell me. That's why I asked yesterday in the class if anyone has played. See, okay, by the way, what is the conclusion of this table now? We are not going to add all of this. Don't add all this and decide. By looking at this table, I can see there are number 1, number 2 positive probabilities, and there are 3 negative probabilities. I may decide not to do the project because probability of negative outcomes are more than probability of positive outcomes. But again, this is based on my selection of random samples. That's what I told. This is used in so many cases. If you are a fan of video game, do you play? Anyone here plays a video game? Again, if you don't want to answer in class, you can answer later. See, if both of us are playing same game, right? My experience and your experience need not be same at the end of the game, because what system throws to me is not same to you. That depends on your past performance, your ability, the level that you choose. That if you have played Mario, anyone, or I'm the only old man sitting here, how Mario have played? Tell me in Mario, it is not same. If it is same, then people will close their eyes and play, because you don't know what is going to be the next number that is going to be picked from thousands of possible next move. Which one is that? The computer is picking the random number. So depending upon your stage 1, your stage 2, you do not know what is going to be your stage 2. That is out of 1000 random numbers. I'll only have to show a gambling video now to convince you. Anyone, you've been to Goa? In Goa, played casino? You played casino, made money. What is the chances that you'll make money next time? This is where you use. So if you can you explain, because see, you need to know both simulation and casino to understand the correct application. If you know only one, then it is difficult. I'm not asking you to try this today, but if you're free this weekend, do we have casino outlets in Bangalore? Is it allowed in Bangalore? I don't know. Many know the answer, but they won't say in the class. I know this. I don't think it's allowed in every state. I'm not sure. Anyone has the answer to this? Sir, after coming from Goa, you did not check outlets in Bangalore. No chance that after winning that too, if you have not checked, then I'm doubting. You should have checked. You have not? You have checked, that means. I know. So see, there the second move depends on the first move. So you do the first and you don't know which one is going to be the second. And that is from out of lots of 1 lakh, 1 crore possibilities. And system throws you that. Video game is the best example. As I told you, if I do a particular stage, if something is to be moved like this, I am that Mario guy. I came till here. Which one will be thrown from the system? I do not know. And that depends on thousands of possible samples. And that has difficulty range, easy range, moderate range. That depends on my stage, my past performance. So based on that, system is picking, and all of that is happening in milliseconds. Because game can't be slow. It has to be faster than you. There was this Chinese game, I forgot the name. Sorry. Many used to play 2-3 years ago. Now people aren't talking much about it. Or maybe you have. Oh, sorry, PUBG. Anyone plays PUBG here? We won't judge you. Don't worry. Yeah. Anyone does betting on any of the apps for cricket matches? Sorry. We have horse race. Okay. Anyone does this? What are we talking early in the morning? But it's okay. Anyone been to race course road? You have seen. I know you have seen all of you. Now understand, how will you, those who understand cricket, how will you predict which type of delivery the bowler is going to bowl next? Those who know cricket, they will tell you there is no answer to this question. Those who do not know cricket may say based on last match, but that's not how it is. That means you don't know cricket, simple. It is not based on last match. It depends on lot of things. Pitch, the batsman bowling from this end or that end, the field setting during power play. That means there are so many combinations, and from there you will have to pick which one is going to be. If you watch football, there are tools now where you can predict if team A is going to be taking a free kick. Now I hope you know at least what is free kick is not penalty. These are two different things. Penalty has no random number. There's only one guy. Correct. In free kick, how the opposition is going to set the, say, fielding. That's not the correct term for general understanding. That can be based on past data. Statistics is used everywhere. That can be based on past data. If you are a fan of Argentina, then you will know this. Anyone here a fan of Argentina? Anyone is a fan of Manchester United? It's English Premier League. Again, my problem is none of these examples are applicable to everyone. Many won't understand. These teams use all this statistics theory to predict how the other guy is going to take the free kick. Accordingly they set, and how is he going to take the free kick is based on the past data. But again, that won't tell you exactly how he's going to take that. Yeah, exactly like betting also. How is, say, Bumrah going to bowl for this guy? There are lakhs of people who are predicting. I don't want you to start doing these things, but at least knowing is not wrong. Yeah. So the practical application of this, not in cash flow. Understand, this was never invented for capital budgeting. This was invented only to win gamble. We are trying to see if that can be used in decision making. Therefore, in real world, in your client place, you may never use this. Getting it? If you are playing casino, then knowing this will surely help. So the real application of this is actually outside the capital budgeting. We are only trying to see if this can be used in capital budgeting or not. So by the way, we are not going to total, and based on positive or negative, we are not writing any conclusion. Based on this, I got to know out of 5 random numbers, three numbers are negative and 2 are positive. That means there is greater chance of negative NPV. There is lesser chance of positive NPV. I may decide to reject this project. Yeah. Write down class note. Class note. In exam, there can be third uncertainty. There can be third uncertainty, that is discounting factor. In that case, we will have to do third working note as well. Class note 2. Number of simulations, that is trial runs, in exam will be based on marks allotted in bracket 5 marks, 5 simulations. Try one sum, write as additional classwork. Project cash outflow negative 2 lakh. Project cash inflows, make a small table, rupees and probability. In bracket, this is annual. 60,000, 80,000, 95,000, 1,05,000. Probability 0.3, 0.4, 0.15, 0.15. Adjustment C, life of the project. Life 2 years, 3 years, 4 years, 5 years and 6 years. 0.1, 0.25, 0.35, 0.20, 0.10. Next, discount rate. Discount rate. Again, values and probability. Value and probability. 8%, 9%, 10 and 11. We'll take one more, 12%. 0.35, 0.30, 0.20, 0.05, 0.10. Last line. Run 5 simulations and determine NPV. Run 5 simulations and determine NPV. Tell me what is the extra thing I added? The third uncertainty, the discounting factor. So we'll have to do 3 tables: working note, range calculation for cash inflow, life and DF. Then when you do the NPV table, it will be slightly bigger now because you need 3 random numbers of 2 digits each: 53, 87, 49, 53 for first, 87 second and 43 third, and then calculation of NPV. Can you try? What is the first thing to be tried? Working note 1, allocation of random number range. Allocation of random number range for annual cash inflow. First will be value, then probability, probability into 100, then cumulative numbers, then you assign a range. Sorry. The range should be of 2 digits. If you take 100, then that will be third digit. The time series should be from 00 to 99. The upper end is 99, not 100. So it should be 2 digits number. That's the reason we stop at 99. We don't take 100. Total of probability should be equal to 1. That means the highest possible is only 100. And if I want the two digits, then the highest possible two digit is only 99. If probability is 1, then why will you call it uncertainty? Correct. Uh, so in your trial run, you won't normally take 0, 0, take 0, 1. See, either 0, 0 or 1. You don't need probability. You need probability in the range greater than 0, less than 1. Now, if 3 tables are done, then 5 simulations, I leave it to you. You can take any random two-digit number. But when you're writing the table, be careful. It's slightly bigger now, correct? 3 uncertainties. So there itself you have 6 columns and then NPV column. One of you can read out the first simulation. Now we can't check the answers. I know, but if there is a chance we fall in the same range, then our answer may match. One of you can read first, which was a random number. Now, same person should read entire row, not three different people. Sir, can you read 45 and 56, 70? So for 45, cash flow is 80,000, 56, 4 years. Now, anyone in the class has this combo 80,000, 4 years, 10%. Number may be different, but if you're in that range, then you will have one of the trials you check. Yes, what's the NPV, sir? 53, is that correct? That's okay. Approximately, is it correct? Now, this you can check only if this is the combo. Otherwise, your answer can't be checked. Yes. One of you want to read any 36, 93, 54, and anyone has this combo 80,000, 6 years, 9%. What's the answer? Positive 1,58,800 or 900 approx. This is the only way we can check the correctness of answer. And this we can't do in exam. That's why I told you they will not let you decide the trials. Then there is that many possibilities. One of you, sir, you want to read? Yes. By the way, you don't have to read your third. You can read your first also. I saw you went to third line item. You can read any. 76, 85. Now when you choose higher numbers, I have done it intentionally discounting factor here. If you choose higher number for discounting factor, your NPV will come down. Those who thought all three highest will give me highest, that won't happen. The last one should be lowest. Discounting factor is low, then your NPV is high. Correct? Yes. For 76, what's the cash flow? 95,000. 5 years. Sorry? 12%. Anyone has this combination 95, 5 and 12? Yes, sir. What's the number? 142, 450 approximately. Positive number. Is that correct? So this is the problem with random theories. At least 5 you have to do if question is for 5 marks. Tell me if you want worst case answer. What random numbers I should take? First two lowest and last one is highest. The last one is discounting factor. High discounting factor, NPV will be low. Less cash inflow, small project, small duration, but discount rate is very high, then you'll get the lowest possible answer. Understanding? Why is it good, you tell me? Why is this method good? It will give you what all can happen. Correct? What all. And if it is Excel sheet, it won't take so much time. You won't dislike this method with Excel sheet. It will be easy. You can put the formula, correct? And then you can do n number of tables, rows, line items. So one is its random nature gives you all probabilities, right? Number two, if that random number is manually selected, then it becomes the worst possible method. Then you can choose what you want because you know accordingly your outcome will also change, correct? I'll just give you how gaming companies use this. Okay, the very simple example may sound childish. Anyway, gaming theory, it has to be. Suppose there is a stage and you are this player. Whether A snake should approach you or a tiger should approach you. Correct? This depends on many factors. Number one, from how many years you are playing this game? One, two, three, four, five. Understand, this company was invented 5 years ago, so maximum user is playing only from 5 years. And which stage of game you are in? The difficulty: 1, 2, 3, 4, 5, 6, 7, 8. Eighth stage is final stage. And at this point where you are about to face either snake or tiger, how many lives are still with you? You know what is life in gaming theory. If you die also, you can still continue the game. Suppose you have, oh, no life, one, two, three. Now tell me, once you are here, whether snake should appear or tiger should appear, that depends on how experienced you are in the game and at what stage you are playing currently and how many lives you have with you. Assume this is more dangerous and snake is less dangerous. That's how the software is made. Then tell me, when will they send tiger to you? If you come under this combination. Correct? Now for this you assign a probability. If someone is playing, what is the probability that he is playing from last 5 years? That is based on your data. You know your usernames, you know when did they install the app and so on, and which life he has, and sorry, which stage he is in, and then which, how many lives he has. What if I am the new guy playing from only last 1 year? I'm still in stage 1. Correct? And I have only 1 life. Then they won't send tiger. Game may be over there. They want people to play for longer hours, so they will make it easy if you are a new guy. Correct? Now if the combination is 1, 1 and 0, then the outcome will be snake. If it is 5, 8 and 3, then the outcome will be tiger. Now this can be any combination, that many combinations, and all of this will work in milliseconds in the backend. The software is tuned. Once the guy comes here, which one to be shown, whether snake should attack him or tiger should attack him, depends on the combination of these three factors. This is how gaming softwares or gaming companies use this. We are trying to make snake and tiger as NPV, and trying to do this based on cash flow, life of the project, discounting factor, and trying to find out whether this theory can be used here or not. If it was such a good theory, then you should have studied this in Inter itself, or it should be universally accepted. By the way, Monte Carlo is not the person who invented it. It's a place where casino became famous. Yeah, so you know the original reason why this was invented was not to solve your NPV problem. Therefore, you will see this more applied in gaming companies than in uh, NPV decision making process. We are only checking, is there a way we can use this theory in deciding whether to accept a project or not. Out of all the methods that we discussed, this method is the least practically used method in capital budgeting. Sensitivity analysis gives you some sense. Okay, if selling price changes by 10%, this can happen to my NPV. There is a reason, there is an explanation. All of us get the correct answer, same answer. But here we get the different answers because there can be so many combinations. By the way, I only said 5 years, 8 stages, and 3 lives. You can add that many other things, whether he is with gun, without gun. Then there are again gun, yes or no. Depending upon that combination, again things will change. Correct? And they want you to have a better experience. Therefore, they will add more of this. Then automatically your random table and probabilities, there may be 1 lakh probabilities. One of that only will happen to you. That's why I told you, if we both start playing the same game at the same time, our experience after 15 minutes will be different, because I'm playing it from 5 years. I'm in 8th stage. I have only 1 life. Then what I experience is different. And they want you to experience for longer duration. Therefore, they will try and keep it easy initially and make it very difficult later. Those who play games will understand all the time saying. So next time when snake comes in your screen and it's tiger in somebody's screen, understand it is because of the combination of three factors. Yeah, I know snake and tiger is not the correct example. I did not get anything else to explain. I don't play these games. Do you know what I'm talking about? Yeah. Right. Now the additional concepts in this chapter, this is an independent discussion from here. Till now, what we learned is adjusting uncertainties, adjusting risks. Machine replacement decision is a small concept that they've added in study material, which was earlier there in intermediate. Now in the new scheme, intermediate FM, they've removed machine replacement problems. Now what we learnt in inter was which machine to buy, A or B, depending upon higher NPV. But some of you who did inter recently, last year, you may even remember we have done machine replacement problems also in intermediate. Existing machine, new machine, whether to continue with existing or shift to new machine. Now you are in final, that is removed from inter syllabus, that is added in final syllabus. Therefore we will have to cover this segment also. Basically our NPV decision, most of the times we think decision is taken at year 0 when I have to buy machine A or machine B. When I say replacement decision, I already have machine A, maybe from last 5 years. Its balance life is another 5 years. I am thinking whether to continue with the same old machine or buy a new machine today. That is called machine replacement decision. Read in the notebook first, write the heading. Additional concepts. Machine replacement decision. Read. WX Limited has a machine which has been in operation for 3 years. Its underline remaining estimated life is 8 years with no scrap value at the end. So total life is 3 plus 8. 3 are over, 8 more to go. Its current market value is 2 lakh rupee. That means if you sell that asset today, then you can earn 2 lakh rupee. The word is current. That means it is today's number. Company is considering a proposal to purchase a new model of machine to replace the existing machine. The company follows straight line method of depreciation. Tax rate is 30%. Discount rate is 12%. Present value sum of annuity for 1 rupee at 12% for 8 years is 4.968. They've already given you summation of discounting factor. Tell me, when you see summation of discounting factor, what is the hint? The annual cash flows are same, correct? Otherwise, what is the use of this number? Present value of 1 rupee at 12% at the end of 8th year is 0.404. That means there is some terminal income, maybe scrap value at the end of the life. The relevant information is given to you. Existing machine, new machine, cost of the machine. I have one question here. This 3,30,000, is it to be paid now? When did we pay this? 3 years ago. That means this 3,30,000 is not a cash outflow. I paid this 3 years ago, machine is already with me. But is this 10 lakh a cash outflow? Yes, if I decide to buy new machine, then I will have to pay minus 10 lakh, correct? But if I buy new machine and pay minus 10 lakh, then this existing machine can be sold in the market. And if I do that as per first paragraph, I'm going to earn 2 lakh rupee. That means if I decide to replace the old machine with new machine, my year 0 cash outflow will be minus 10 lakh plus 2 lakh rupee minus 8 lakh rupee. This 330 I will not pay now. Then why did they give this number? Maybe to calculate depreciation. Yeah. Estimated total life 11 years versus 8 years. It's not a problem with unequal life. Out of 11, 3 years are over. That means starting from today, it is 8 versus 8 only. Correct? You continue with old also, 8 more. You purchase new also, 8 more. Sir, can this be different? 8 versus 8, can it be 8 versus 10? Yes. That we'll discuss later. That also you have, that's called project with unequal life. As of now, from today, it is 8 more years whether you continue with old or purchase the new. Salvage value 0 and 40,000. Now what is this 0? If you continue with the existing machine for 8 more years. At the end of 8th year, you will get 0. But today itself, if you sell, the current market value to be taken. The word is current as on today. But if you purchase new machine, at the end of its life, you are going to earn 40,000 terminal value. Terminal is value at the end of the life. Annual output 30,000, 75,000. This is the reason why we are thinking of replacing the machine. It will give you better output, more units, selling price is same, annual operating hours, material cost, labor cost, indirect underlying cash cost. That means depreciation is not included in this. The word is cash cost. That means this is rent, fixed salary, all of that. Ignore capital gain tax and impact of block of asset. So you don't have to worry about that. Advise WX Limited whether the existing machine should be replaced or not. Now, any replacement decision, you will have to compare what will happen if I continue with existing with what will happen if I shift to new. The difference between the two will be your incremental benefit. Understand? If I already have a job, my house is here, this is my present job, job 1, I go every day, come back, they're paying me 40,000 rupee near to my house, transportation cost is only 1,000 rupee. Now same job, same company, they're asking me to go to another branch which is far away from my house. I said no, I'm not going there. Anyway, same job I can do from location A. They say no, you have to go to location B. I'll call it as job 2. Because you said no, it's far away, they said we will pay you 42,000, don't worry. Is this data enough for you to decide whether to accept job 2 or not? What is the extra information that you need? Additional information. What if traveling cost to that place is 4,000 rupee? Now what is the decision? I won't do, because how much is the extra earning? 2,000. For that, how much is the extra spending? 3,000. So why will I spend 3,000 extra to earn 2,000 extra? This is called what now? Incremental loss. Correct? Extra earning versus extra cost. Imagine they say it is 42,000 and you will, and you know you'll be spending only 1,500 rupee. Now 2,000 extra versus 500 is the extra cost. Then there is incremental benefit of 1,500. It's a good decision. Now this is your old machine. This is your new machine. If I purchase new machine, there are some benefits, but to purchase new machine, there is also some cash outflow. The net difference is called NPV, but this is not NPV of old or NPV of new. This is called NPV of replacement decision. Because here, this 1,500 is what? NPV of change of job. Correct? NPV of change of job. Same way here, it is NPV of change of machine, which is NPV of replacement decision. That means I will have to see how much extra I am going to spend and compare that with how much extra I am going to earn. If the net difference is positive, I am earning more than spending, go ahead, replace the machine. Otherwise, continue with the existing machine. Start. Solution. Note 1. Decision of, start writing, decision of replacement, decision of replacement is based on, in inverted comma, incremental benefit slash loss, incremental benefit slash loss. Yes, listen, the first sum we did 4 days back was simple NPV calculation. Minus year 0, year 1, 2, 3, 4, 5, we calculated annual CFAT, started with PBDT and so on. But here it will not be just CFAT. You will have to calculate CFAT of old and CFAT of new and take the difference in CFAT. correct? That means my table will not be computation of CFAT, it will be computation of incremental CFAT, because I will anyway earn something, because I already have one machine. I only want to know how much extra I am going to earn. Therefore my heading start now, computation of incremental CFAT. If it is single machine, my heading will be computation of CFAT. Three columns. Let the first one be small. If I continue with existing machine, compare that with new machine. Now, if you remember, to reach CFAT, we started with PBDT, correct? But in this question, I don't see even PBDT. They have given sales. So from sales minus material minus labor, from there I'll first reach PBDT. From there depreciation and so on, and then I'll go to CFAT. So start with first sales. Yes. What's the number? 30,000 units into 15 rupee. 4,50,000. And even new machine, 11,25,000. You don't have to do incremental sales, incremental material cost, and so on. This column, incremental, is not needed. You only need the CFAT difference. Therefore, I can do till the end and find out the difference at the end. That's enough. From this, I'll have to take out all the expenses. You have the cost details in the question first. Material cost per unit 4 rupee. So 30,000 into 4. 1,20,000. Here 75,000 into 4. 3 lakh, correct? Minus labor cost. Labor cost is given on per hour basis, and you also have annual operating hours. So 3,000 into 40, and here 3,000 into 70. Which is the next expenditure you have, indirect. And they said cash cost. That means we don't have depreciation included in this. 50,000, 65,000. Once you reach here, just pause for a minute. Now, if I calculate here itself, sales minus all of this, what will this be? PBDT. Anyway, from here I'm going to do minus D and then PBT. Therefore, here itself I can even minus depreciation and then call this as PBT straight away. Correct? Now for depreciation, they said in the question, company uses straight line method. So this will be original cost 3,30,000 minus scrap value 0. But here remember, it should be 11 years because it is the annual depreciation that you need. Whereas this, I'll spend 10 lakh Scrap value 40,000, but this will be divided by 8 only. First one is 30, second 1 lakh 20. Correct. 130,000, 430,000. Remember, the numbers you are doing is annual numbers. This is per annum. From this, do we have tax rate in the question? Yes, second para has 30% tax. So you get PAT. You add back depreciation. You get CFAT, cash flow after tax. And even CFAT numbers. If you yes. Understand the meaning. If you continue with existing machine, every year, not total, every year you will earn 121,000. If you shift to new, you will earn 4,21,000. Therefore, the difference is called incremental CFAT. Next line. Incremental CFAT is equal to difference between the two. 3 lakh, and this is per annum. Every year you can earn 3 lakh extra for next 8 years. For that, what you should do today? Purchase the new machine. Understand, that is your outflow now. Therefore, heading NPV. But remember, it is not NPV of new machine. It is NPV of replacement decision. Let's start with year 0. Tell me, if I want to earn 3 lakh rupee extra every year, right now what I should do? Pay 10 lakh to purchase the new machine. But if I purchase the new machine, the existing can be sold. That is given in first para. So 2 lakh, your cash outflow is 8 lakh negative. And this is year 0. So DF is anyway 1. This is your DCF 8 minus 8 lakh. Year, I can write 1 to 8 because that extra 3 lakh is same for all the years. Correct? Listen, if they want to drag this sum unnecessarily, they can change depreciation method as WDV. Then you will have to work out incremental CFAT for every year. Because depreciation is changing. If depreciation changes, tax will change. Correct? Then this will be CFAT existing new for year 1, year 2, year 3, year 4. Then the difference, then you can't write 1 to 8. It will be 1, 2, 3, 4. Every year, only the incremental number you will have to take. If they want to make it a 10 marks question, they can drag it with WDV method. You will earn 3 lakh rupee. Correct? But now since it is year 1 to 8, I have to take the summation of factors 4.968. And there is one more, 8th year. Now observe, for existing machine, scrap value is 0, correct? For new machine, it is 40,000. That means this is as good as incremental scrap value, correct? If I continue with existing machine, how much will I earn at the end of 8th year? 0. But if I buy new, that can be sold at 40. Therefore, I am with full confidence taking this as 40. What if in question this is not 0? What if this is 10,000? Then the incremental scrap value will be 30,000. You'll have to take only what extra I'm going to earn. If I continue with existing, I can earn 10,000. If I shift to new, I can earn 40. This table is all about incremental numbers. That means even this in that case will be incremental number. As of now, it is 40,000 versus 0. So it is simply 40,000. And this discounting factor is given as 0.404. This is your NPV of replacement decision. What's the year 1 to year 8 number? 15 lakh something? No, 14 lakh 90,000, and this should be some 16 120. That's 160. You will still have the same conclusion. So positive 7 lakh by 60. Remember, this is NPV of replacement decision. Since it is positive, it is good to replace. If you've completed till this one line conclusion, considering positive NPV, comma, it is preferable to replace the machine. Can somebody tell me what is the long route of getting this answer? There is another way to get this answer. Anyone? Work out two independent NPVs. NPV if I continue, NPV if I buy new. What will happen in that case? If I continue, year 0 will be no outflow because that machine was already purchased. Year 1 to 8 will be 1,21,000 into summation. Year 8 the scrap value, that will give you NPV. Same way one more, that CFAT will have 4,21,000. Then year 0 you'll have to purchase the machine minus 10 lakh plus 2 lakh, and then this 4,21,000. You know what will happen now? Two different NPVs will come. The difference between those two NPVs will be equal to 706,560. And which NPV will be higher? The new machine. If this old machine gives you 8 lakh rupee, then that new machine will give you 15,06560. And then also you can write a conclusion, since this number is higher, we will have to go by new machine. But that's a very long way of doing the same sum, correct? Just think about it. If this is NPV of old machine, tell me what will happen. Year 0 nothing, because you've already purchased this will be 0. This will not be 3 lakh, this will be 1,21,000. Summation, you will have a number. Scrap value you are anyway not earning if you continue with this. Then you have this as 0. Then you get the NPV. Here NPV, this number is 0, this number is 0. So only total of positives, correct? Same way, NPV of new machine. Again, year 0, 1 to 8 and 8. Now you'll have to take this 4 lakh 21,000. Then you'll get one NPV. If this number is 8 lakh, old machine, then the new will be old plus the difference. But that's a time taking method in examination. Easy to do is to calculate the difference between two and go by the incremental approach. Yes. We'll take a break, 5 minutes, and then we'll continue. Yes. Concept of equivalent annualized criteria, EAC, and optimum replacement cycle. This concept of EAC will be necessary whenever you have to compare two projects with unequal life. The previous sum we did, whether it is continuing with old machine or buying new machine, the balance life was same 8 years. What if that is 8 versus 5 or 8 versus 3? Then comparing the NPVs would be incorrect. I'll give you a small example. Project A, project B. 3 years, 8 years. NPV positive 10,000. Here NPV 10,100. Now, if you compare NPV versus NPV, this appears to be good. But then to earn 100 rupee extra, I have to run the project for 5 more years. Correct? It takes longer duration. Whereas this 10,000, I can earn within shorter duration. Therefore, if projects are of unequal life, then you can't compare NPV versus NPV. In such case, you will use annualized criteria, and for that we should understand first what is this unequal life and what problems will come when you have unequal life. See this. There are situations where projects with unequal lives are to be compared and decisions should be made. For such situation, one of the following approaches we can use: first, replacement chain, and second one is equivalent annualized criteria. But my heading was only equivalent annualized criteria. That means this replacement chain. By the time you understand this, you will also get to know why this can't be used in all cases. Read. I have given a small example. This itself can come as a question. I've given both calculation, yeah, question as well as answers. Example: there are two projects, one with 6 years, the other with 3. year 0 up to 6, project A, this is investment minus 40 lakh, then inflows, and project B minus 20 lakh and inflows, and then project is over after 3 years. Yeah, there is nothing in year 4, 5 and 6. Discount rate is 12%. Now with 12%, if I prepare NPV table, that will be this into DF, DCF 80 and this NPV here, this NPV here. The NPV at 12% will come to 6,49,000 and 515,488. Now calculating that is easy. So our discussion will start from here. Now normally what we do, decision is based on higher or lower NPV, positive or negative NPV. In this case, higher, because you have two options in front of you. But if you choose 6,49,000, understand to earn that you will have to wait for 6 years. Whereas here 515 can be earned in 3 years. Read, NPV of A is better than B, so we'll consider A as superior. But project A will take 6 years to earn this NPV of 649, whereas B will earn 515,488 within 3 years. This is a situation of unequal life, and now we can either use replacement chain or annualized criteria. So this is when you need to know equivalent annualized criteria. First one is replacement chain method. Now I'll explain how this works, and you need to tell me why this is not really practical. It says under this method we need to convert the project with smaller life to make it equal to project with bigger life. One project is 3, another is 6. Therefore, we need to work out the NPV of 3 years project by assuming that we do it twice. Why is it twice? So that we can make both as 6. Now it is 6 versus 6. It is comparable. Basically, we need to reach a common time point. Now both are for 6 years. NPV can be compared. Then how do I do for that smaller project? See this. You can refer to previous page numbers. Minus 20, 7, 13 and 12. Project got over. But if you have to compare it, you have to make it a 6 years project. Then assume you do that 20 lakh investment once again in year 3. Correct? And then year 4, year 5, year 6, you will earn again 7 lakh, 13 lakh, 12 lakh. If you do this and then multiply with discounting factor, you will get NPV as positive 8 lakh 82,000. Now definitely B is better. You answer why this is not a practical way of solving unequal life problems. Number one, no guarantee after 3 years we will have a project with same life, same amount. Correct? Number one. Number two, all that you're predicting now is correct for year 1, 2, 3. Whether the duplicate project, let's call it duplicate project, will have same cash flow or not is also not sure. There is one more problem. Can somebody tell me? Life is 3 and 6, therefore we said into 2. Tell me now what can happen. What if it is 3 and 5? Then tell me what to do. You have to assume that the 3-year project is done 5 times and 5 years project is done 3 times. Then both will meet at 15-15. Otherwise, there is no common meeting point. Yes or no? So what, sir, we can do? Why is it wrong if I do that way? Number one, sitting today expecting same project will come 5 times after 12th year also. You're not sure. Number one. Number two, cash flows won't be same. And tell me in real world, who is doing same project twice? Understanding? Even if you do same project, price may change, inflation impact may come, uncertainties are high in future. Okay, what if it is 8 years and 7 years? When will these two numbers meet? 56. 56th year, what is the value of 1 rupee? No meaning in doing that NPV table. Correct? After 15, 16 years, you will start seeing number will come to almost 0. Correct? 1 rupee value after 16, 17 years, you do it in Excel sheet today. 1 divided by 1.1. Do it for 17, 18 years in office, you will get to know 1 rupee will vanish. And we are talking about 56 years, 63 years, that will not make any sense. So what is the better way now? Instead of trying to find out a common point, can we bring down to per annum number? 8 versus 7, instead of making 56 56, bring both to annualized number. That's why the second method more sensible. That's why it's called equivalent annualized criteria. See this, the weakness of this approach is that we are assuming there will definitely be a project with same amount even after completing it once, which in real world may not happen. Second, if it is 3 and 5 years, I discussed already, 3 into 5, 5 into 3 after 15 years. If it is 8 years and 9 years, then the only meeting point is after 72 years. There is no sense in doing any calculation for 72 years. This task is number one, time consuming, number two, meaningless also. Therefore, we have the second alternative, equivalent annualized criteria. Now we have to consider the original data. In original data, when it was 6 years and 3 years, tell me A had an NPV of 649,094. Go to that page where you had base data. And second one was 515,488. And this is for 6 years. Therefore, we divide this by summation of discounting factors for 6 years. And this we divide by summation of discounting factor for 3 years. Now what you get is annualized number 157 per annum, 214 per annum. Now definitely B is better because now both numbers you have brought it down to annualized numbers, correct? Hence the solution, project B is better. Now this is correct because these are NPVs, NPV positive, therefore I'm choosing the higher one. What if you have only cost details? I have to spend something, then you go by lower cost. That is why the name is not equivalent annualized NPV. They said equivalent annualized criteria. If it is NPV criteria, choose the higher one. If it is cost criteria, choose the lower one. Correct. I will earn this over a period of 6 years. I will earn this over a period of 3 years. So I divide by summation of discounting factors for 6 and discounting factors for 3. Now, why am I dividing it by summation of discounting factor for 6 and 3? Understand this number 649 I will be earning over a period of next 6 years. That means if I go by simple average calculation, I should divide this by 6. Then I'll get to know per annum number. But when I'm writing 6, what is the meaning? It is year 1 plus year 2 plus year 3 plus year 4 plus year 5 plus year 6. But 1 rupee is not 1 rupee always. Correct? First year, 1 rupee is 0.909. This is 0.826. Third year factor, fourth year factor, fifth year factor. This is nothing but summation of discounting factor for 6 years. Understand, some students get confused. Divided by 6, I wrote 6 is nothing but 1 plus 1 plus 1 plus 1. If 3 friends go and the bill is 900 rupee, you have to share it equally or dividing by 3. Why are you dividing by 3? Because there are 3 people. So it is basically 1 plus 1 plus 1. Now if you are earning 900 rupee over 6 years, it is nothing but 1 plus 1 plus 1, 6 times. But this 1 rupee and this 1 rupee is not same. Correct? This 1 rupee is at the end of year 1. That means this is only 0.909. This is 0.826 and so on for 6 years, which is nothing but summation of discounting factors, or as we call it, present value annuity factors. Therefore, you take the number of years and divide it by summation of discounting factors for that many years. So suppose if we have project C and that comes to 2,81,000 and that project is for 3 years or say 2 years, then present value annuity factor for 2 years, which is 0.909 plus 0.826, that summation only. Clear? If 1 rupee was equal, tell me 1 rupee tomorrow, 1 rupee day after, 1 rupee after 10 years also was same, then I would have simply done divide by 6. I can't do divide by 6 because it is not 1 plus 1 plus 1 plus 1. It is 0.909 plus 0.826 plus 750, which is basically summation of discounting factors. Yeah. Given a small note, mark this important. If question comes only with the cost with different life, obviously our discussion is unequal life, then lower annualized criteria should be chosen, because in that case EAC should be understood as cost criteria. The example I discussed was NPV criteria, so I selected the higher one. We'll learn it with the help of question number 15. Company wants to purchase a machine. They have two options, machine X and machine Y. Details are given to you. Particulars X and Y. Original cost, useful life, annual running cost. This is every year, and this is for next 2 years. So it is 65 and 65. And here it is 45, 45, 45. 3 years. It is 2 versus 3. That means it is an example of unequal life. Consider 10%. Which machine would you choose? Here you don't have any inflows. That means it is annualized cost criteria. Start. Question ACB 15. Computation of equivalent annualized criteria in bracket cost. Machine X and Y. Year 0, I'll spend 2 lakh. Here I'll spend 3 lakh. I'm not writing minus because my whole table is minus. Correct. Year 1, I'll be spending 65,000. Here it is 45,000. But this is after 1 year, not now. Therefore, this should be multiplied with discounting factor. 10% they said 0.909. Here also 909. $65,000 into 0.909. Sorry, 59085, and here 905. Second year 65,000, same 45,000. Say I could have done summation because it is same 65 twice, but in some other question annual running cost can be different also. Correct. This into 0.826, 0.826. 53719 Life of machine X is only 2 years. So you have no cost to be incurred in year 3. But here 45,000 into 750 or 751. You take the exact number. 33,795. This total will give you the total cost over 2 years versus 3 years. That's why it can't be compared, because the time periods are different. Can somebody confirm this? Approximate 312,700. 870. Now why these two can't be compared? To spend 411, you have 3 years time with you. But to spend 312, you have to spend it in 2 years only. That is the meaning of unequal life and why this can't be compared. Therefore, now this you divide by summation of discounting factor 10%. This is only 2 years, but this will be divided by 3 years. When you do this, you are bringing everything down to annualized value. So 2-year summation, when I say it is 0.909 plus 0.826, 1.735 is it? This will be your equivalent annualized number. 180 approximately 2.486 or 7. So on an average annualized basis, you spend 180,270. So machine X is costlier, correct? So now we have to choose the lower EAC because it's about cost. They could have just added one line at the beginning, cash inflow. Then you have to do cash inflow minus outflow. You get NPV, and then equivalent annualized criteria will be NPV. You will then have to choose the higher NPV. One line conclusion. Considering lower criteria EAC in bracket cost, machine Y is preferable. This is what you call as time value, correct? Spending 100 rupee in next 2 years is not same as spending same 100 in next 3 years. Total 100, I'm saying total 100 in 2 years versus total 100 in 3 years. Definitely spending 100 over a period of 3 years is better because you get that 1 year extra time, and money loses its power when you spend it late. It's good. So people want to earn early and spend late because money loses its value over a period of time. There is another sum, but that has a new adjustment. ACB 16. X Limited is a taxi operator company. Each taxi is costing them 4 lakh rupee and it has a useful life of 3 years. The taxis cost for each of the 3 years and salvage value or resale value at the end of the year is given to you. Year 1, year 2, year 3, cost and resale value. First understand this table. For all combinations, this minus 4 lakh will happen, correct? If I decide to keep this taxi with me for only 1 year, then my cash flows will be like this: minus 4 lakh, minus 1,80,000 into discounting factor for year 1, and I may sell it at the end of the year, then it will be plus 2,80,000. Again, this is at the end of the year 1. That will be discounting factor for year 1. But now be careful. If I keep this taxi for 2 years, then year 0 minus 4 lakh, year 1 1,80,000 into DF1, year 2 2,10,000 into DF2. In year 2 itself, you will have an inflow of 2,30,000 into DF2. Understanding? Net number will be negative itself because you're spending, and there is some scrap income. There is no sales or profits or CFAT. What if I try keeping the taxi for 3 years? Year 0 minus 4 lakh, year 1 minus 180, year 2 minus 210, year 3 minus 238, and year 3 plus 168. Whenever it is year 1, 2, 3, I'll multiply with DF1, 2, and 3. respectively. Now the question is, you are required to determine optimum replacement period of taxi if discount rate is 10%. What is the meaning of optimum replacement period? When should I sell it? Should I sell it at the end of year 1, 2 or 3? Yes, start. ACB is 16. Option 1, sell taxi at the end of year 1. Relevant cash flows. Relevant cash flows. Go slow. Minus 4 lakh. This is year 0. I don't need discounting factor. One more, minus 1 lakh 80,000, but this is to be multiplied by 0.909, correct? And then there is resale value. It's a cash inflow. It is plus 2,80,000, but even this you will earn at the end of year 1. For year 1 you can take the net number also, minus 180 plus 280, you can take net, nothing wrong. 309 100. I want you to leave 2 lines and then start option 2. I'll tell you why you need that space. Same way. Option 2, sell taxi at the end of year 2. Relevant cash flows. Minus 4 lakh. Minus 1,80,000 into discounting factor. Second year, minus 2,10,000 into 0.826 plus 2,30,000 into 0.826. Five lakh 47 100. Leave 2 lines. Sorry. Yeah, outflow. Minus. Can you tell me why I'm asking you to keep 2 lines? Can I compare these two highlighted numbers as it is? We are working out under unequal life. This minus 309 100 will happen at the end of year 1, but this is happening after 2 years. That means you'll have to divide by summation of DFs, or to bring it down to common annualized figure. I'm leaving space for that. And then option 3, sell taxi after 3 years. Relevant cash flows. Minus 4 lakh. Minus 180,000 into 0.909. minus 210 000 into 826 minus 238 2751 plus 168 into 0.751. These three final numbers you got can't be compared as it is because they're happening at different point of time. So now first number you divide by PVAF 1 year, next PVAF 2 years, and PVAF 3 years. PVAF 1 year you don't need to calculate, simply 0.909 because it is only 1 year summation, right? 1 second. Therefore, equivalent annualized cost is equal to this divided by PVAF at 10% 1 year. Anyone first year number? Is this correct? Minus here same way minus 547 100 by present value annuity factors at 10% 2 years. 1 second. Now you need to take 0.909 plus 0.826 2 years summation 1.73 315 331. Now you can even feel that these are comparable. Earlier you could make out directly that I can't compare 3 lakh with 5 lakh with 7 lakh. Now we have brought down all numbers to their annualized numbers, right? Last one, if you have tried already, $317 approximately 638. This number will be divided by PVAF for 3 years 2.486. Remember, even this is negative, so it's a cost criteria. The lowest one is year 2, so the right point to sell this taxi is at the end of year 2. If numbers are ready, you can write one line conclusion. Considering lowest EAC in bracket cost criteria, here is cost criteria, close the bracket, it is advisable to replace the machine at the end of year 2. Yes. Now this can be a multiple choice question also. EAC in option 3 is dash. Simple, you don't have to do all 3 directly. Third year, they can simply ask a question like this: EAC if company decides to sell this taxi at the end of third year is dash. In that case, it is minus 4 lakh, minus 180, minus 210, minus 238, plus 168 multiplied by all relevant discounting factors divided by summation of 3 years, because you're thinking of replacing at the end of third year. Yes. Basically, it is discounted cash flow divided by PVAF. If you have to understand this as a formula, discounted cash flows divided by present value annuity factors. If it is NPV, choose the higher. If it is cost, choose the lower one. Write down in your notebook concept of real rate and nominal rate. Concept of real rate and nominal rate. This is used in other topics also. So I'll dictate the summary of this in our page 199, I think now. 2-3 basic things. Let's first understand that. If I ask you to give me 100 rupee today, and if I promise that I'll return same 100 after 1 year, straight away people will say no. The reason is they know that 100 can earn some interest if it is kept elsewhere. Yeah, some of this is little bit of economics. Try to understand at a macro level. Why are you not ready to give me 100 and take back same 100 after 1 year? Because you know it can be kept elsewhere, and that elsewhere can be even without any risk. I'm not talking about inflation problem that we'll discuss later. If you give me money, there is a risk I may not return. But if that money, correct? But if that money is in, say, bank FD or government bonds, treasury bills, treasury bonds, then there is no risk. So when you're giving me money, you know that there is some risk. When you're keeping that same money with bank or government, then there is no risk. And if that without risk you can earn 4%, example I'm taking, why will you give me money at anything less than 4%? You need at least 4%. You need something more also, because there is some risk involved. And I'm not even talking about what will happen to this money 1 year later. Inflation I'm not discussing. Forget inflation. Without any risk, keep inflation aside. If you keep money in bank FD, they'll give you bare minimum, say 4%, 5%. Correct? Most of the government of India bonds, let's take 4 to 5% for our discussion, and that's what happens. You might have given this advice to many of your clients. To escape capital gain tax, you say go and invest in NHI bond. Based on your advice, they'll search on Google, and immediately they'll come back to you with another answer. Have you checked how much is the interest rate that those NHI bonds give? Nobody will invest if you go by only rate. The rate is very less. Then also some people go because they want to save, number one, tax here. Number two, government wants you to invest more money there, so they can always come back with more incentive, saying that interest will also be exempted in future and so on, just so that more people put money. And when you put money, it goes to government itself. NHI is under government any day. But that is risk free. NHI has the very, very good high credit rating. There is no risk of non-repayment. Money will surely come back, which means without considering any problem of inflation, you can still earn minimum 4 to 5%. That means you're not going to give me 100 and take back 100. Then I said, okay, you give me 100. I'll give you exactly 104, because that is what government bonds are giving, 4%. Then also you may not be okay with 104. The reason is you need some premium, because there is a risk when you give me money. That 4% with government was without risk. So you want some premium, because giving me money is little risky than giving money to government. Therefore I said, okay, I'll give you 5%, 1% extra, because you're taking risk of giving money to me. Now 100 becomes 105. Now answer my question. You give me 100, I'll give you 105. Are you sure now you will be wealthier at the end of year one? Opportunity cost is taken care. The government bond 4%, 1% premium also I am paying you. Do you think you will be rich at the end of year one if you give me 100 today and take back 105 from me? Sorry. Today with 100 rupee you can buy say 1 kg tomato. Now I'm bringing the third factor. What if 1 kg tomato is 107 rupee? You won't be able to afford even 1 kg even after collecting 5 rupee extra from me. That means the actual return that you want from me is not just risk free plus risk premium, it is plus one more thing now, even the inflation factor. Correct? This is a simple difference between real rate and nominal rate. Real rate is a rate expected without considering inflation. Nominal rate is after considering inflation. So how much is expected from an investor when he's buying an equity share? Now tell me, if you are purchasing Reliance Industries share and your plan is to keep that share for 1 year, number one, you want minimum 4% because government bond was giving you 4%. Plus you want some premium because there is risk in investing in Reliance compared to government. But that together 5% is also not enough, because 1 year later, if you earn 105, what if India's inflation rate is 107 or say 7%? You'll still be losing 2%. You won't be able to buy all the commodities that you're buying today. That means there are two factors that are to be considered. One, the real rate, which is without inflation, which is a compensation for opportunity cost and the risk premium. Second, you also need some additional money because you want to compensate some inflation also. Therefore, your discount rate, all the sums that we did, 10%, 12%, from where did we get that 10%? It is the factor, the combination of real rate and inflation rate. Nominal rate is including inflation, real rate is without inflation. Some basic points I want you to first note down, and then we will work out examples and then go to the question. Start. Huh. No, understand. Okay. Then will I be rich if I keep money in bank FD? If bank FD is going to take care of inflation full, then everyone will be rich just by keeping money in bank FD. Madam, I need money for one more thing. I was about to discuss that also. If you are asking me to put money in bank FD, you are asking me to sacrifice my today's enjoyment. For that sacrifice also, I want something more. No. Risk premium will come into picture when you don't put money in bond, you go to Reliance. Even when I'm keeping my money in government bond, I'm sacrificing my today's enjoyment. With 100 rupee, I can watch a movie today. But you're asking me, no, sir, keep that 100 in bank FD. That means I'm sacrificing the fun of watching that movie. Who will compensate for that? So first I want some compensation for sacrificing present enjoyment. Then I want something because there is risk free bond or FD that is given. And then Reliance Industries, there is some risk also. On top of all of this, there is inflation also. That's why discounting factor comes to 10 or 11% when bank FD interest rate is only 5 or 6%. Otherwise, we should have worked out all discountings with just 5%. Why are we assuming 10%? Yesterday, day before, we almost every sum you see, you have discount rate at 10%. It should be simply bank FD rate, then it should be simply 5%. Yeah. Which means no one will become wealthy by keeping money in bank FD. Okay, then answer one more question. Then why some people are still keeping money in bank FD? They also know this. Sorry. Or is it because they don't know this? Or is it even after knowing they have taken that conscious decision? Those who don't know this, I understand they want to avoid risk. They feel comfortable when it is SBI logo, anything is okay there. Number one. Number two, wealthy people also have some money in bank FD. They know all this. Then why is it in bank FD? Because to keep some portion at least in a risk free area, they need a place. They do not want to put all the hard earned money with risk to go again in risky places. I've earned with risk all these years. Let me at least now have some assured income so that I don't see, as I grow old, any individual, you would like to reduce your risk. You don't want to increase your risk. When you're young, you want to take risk and earn that money. That earning, where do you want to invest? Again in risky place, then forever you will be under risk. Understand? Many people do. Now you decide. I'll leave it to you, which is a good thing to do. Doing this speculation in share trading, say futures option trading, is risky versus bank FD without risk. Say two individuals A and B. Both of them have 10 lakh each in their pocket. This guy puts this 10 lakh in bank FD and earns 50,000. And with 50,000, he is doing future and option trading. Understanding? Second, he'll put entire 10 lakh in F&O and earn some return. And that return he is keeping in bank FD. I hope you understood. Now tell me, who is playing a dangerous game here, A or B? Why A is playing safe? No, don't focus here. Focus here first. Under any circumstances, 10 lakh is safe at least. This guy 10 itself can come to zero. Forget investing that in FD and earning interest on that. You're far away. Understand, as you start avoiding risk, right? And by the way, if you tell both, many youngsters may say, sir, this is a boring way. I don't want to do this. Because to do this, you have to first keep 10 lakh and keep quiet for 1 year. 50,000 won't come today. But this 10 lakh is right now with you. It can go to F&O right now. 9:15 you can log in and buy F&O. Afternoon itself you can earn 8,000 rupees. Correct? So, yes or no? This 50 won't come today. You have to wait for 1 year. That's what I was saying. You have to sacrifice the possibilities of next 364 days and put money in bank FD. And this 50,000 you trade. Even if this becomes zero, no problem. Your 10 lakh is again going to earn one more interest next year. Correct? One is 10 lakh is safe. Second, 10 lakh will continue to earn something even if this 50 becomes zero. Assume this 50 comes down to 40. You lost only 10,000 in future and option. Next year again you'll earn another 50,000 interest. Now 50 plus 40, your capital base for trading is 90,000. Even if you are feeling that I'm taking more risk, don't worry, your principal is at least safe. This is the reason why after a particular point, even wealthy people go for bonds and FDs. If you think only people at initial stage or people who do not have enough knowledge only will put money in bank FD, then banks will not have so much of money in FD. Why banks have so much money? Because after a point, even wealthy people want to play safer, because from say year 25 to year 45, if you have taken all the risks possible in your life, you want to reduce the risk curve. Even if your return curve comes down, you want to have that peace. So therefore, you will not always say that FD is waste. FD is waste depending upon the age of the person who is talking and watching. So no, again, I'm not, FD is not my favorite place. Don't interpret that way. I'm saying FD is not as meaningless as some people talk about. So even the wealthiest guy would have kept some money in bank FD. Number one is to diversify. Number two, to take risk in age 48. You want to earn something in 47, and that 47th year earning should come without risk. Then you can take risk. Otherwise, you'll always be in the loop of risk. Invest, take risk, earn. That you again invest in high risky and continue. Then all your funds will be with high amount of risk. Therefore, bank FD will not compensate both sacrifice of present enjoyment and your risk premium. Yeah. Start. If I invest 100 rupees today, start writing. If I invest 100 rupees today, comma, I want 11% rate of return in bracket without considering any inflation effect, without considering any inflation effect, full stop. Next line. Suppose there is 5% inflation. Suppose there is 5% inflation, then I won't be able to buy I won't be able to buy enough goods at the end of year 1. At the end of year 1. Full stop. It means I need next line, 100 plus, tell me first, you need 11% on 100, correct, plus you need 5% on 111, not on 100, correct. This total 100 plus 11 plus 5% on 111, sorry, what's the number, 11.5, 5 or 5 5 5 5. Therefore return expectation is equal to, tell me, 16.55%, because 100 should become 116.55. That means you need 16.55%. Tell me if I have to put it in formula. This 16.55% has both factors, real rate and inflation rate, correct? Therefore, formula, tell me nominal rate is equal to, listen for a minute. Can I write it like this? 1 instead of 100, making it 1. You want this to be 11% more. Start copying. It is 1 plus 0.11 into 1 plus 0.05. I actually expanded it. It is simply 1.11 into 1.05. Correct. This minus 1. Why minus 1? Because when I had 116.55, I minus 100 to get 16.55%. Now I have 1 rupee investment. Correct. Do this 1.11 into 1.05 minus 1. You get same number. I'm just writing it in formula approach. 1.655, correct, minus 1, 1.1655. So this will be 0.1655 or 16.55%. Therefore, tell me now, formula will be what? nominal rate is equal to, you convert it to formula and tell me. This will be 1 plus real rate, correct, into 1 plus inflation rate minus 1. Mark this as important. Once we get this, I can now shift minus this side 1 into 1, so I can shift it to denominator and so on. Listen, don't copy this now. First understand. This minus 1, if I shift this side, and tell me what will happen. This will be positive 1 plus nominal rate. Correct? No? Nominal rate plus 1 or 1 plus nominal rate is equal to 1 plus real rate into 1 plus inflation rate. Correct? So this 1 plus nominal rate, if I divide this by 1 plus real rate, I should get 1 plus inflation rate. This you can play around now. Yes or no? This is into, so I can shift it this side. Or you can even do this way now, because both are this into this. So if I divide this by 1 plus inflation rate, this will be 1 plus real rate. This one I can shift here now. 1 plus nominal rate by 1 plus inflation rate minus 1 should be equal to real rate. This can go on now. This is the formula printed in the book also. You have it here. Real rate is equal to 1 plus nominal rate by 1 plus inflation rate minus 1. This minus 1 came from this side. Let's copy this. 1 plus nominal rate is equal to 1 plus real rate into 1 plus inflation rate. Shift here 1 plus nominal rate by 1 plus inflation rate is equal to 1 plus real rate. Now if I shift 1 here, 1 plus nominal rate by 1 plus inflation rate minus 1 is equal to real rate. Can be a good MCQ. So now you know in GDP, when they say our GDP is going up, that can go up even because of inflation. Correct? Imagine India was selling 100 kgs of an item last year at 10 rupee. Our GDP was 1000. This year also we are selling same 100 kg, but we are selling at 11 rupee. So this become 1100. Correct? Now this 1100, though the number is more than 1000, India is not growing. Why is India is not growing? Because this GDP is what GDP now? Nominal GDP. Correct? Real GDP, that is without considering inflation effect, there is no growth. You are still selling same 100 kg. If you don't adjust inflation, you are not growing. You are still at same 1000. That means the real discussion on TV that you should watch is real GDP, not nominal GDP. They talk about both. Nominal GDP is after adjusting inflation. Real GDP is without considering inflation. Yes, this is given here. Some finance managers, while taking capital budgeting decision, ignore the inflation that is expected to impact their income and expense during the period. Our objective is now to understand the impact of inflation. Two things: real discount rate is without considering inflation. Nominal rate is after considering inflation. Formula to find out real rate. This is not just real rate. You can move it any way. You can find out any rates. If you have two rates, you can find out the third rate. In a notebook, write down one small example. They can ask this for MCQ. Continue where you are writing. Real rate 10%. Inflation premium 8%. Find out nominal rate. Find out. You have it on screen. Real rate 10%, inflation premium 8%. Find out nominal rate. Understand the meaning first. Without considering any inflation also, if I put 100 rupee, I want 110. But that 110 won't be enough because there is 8% inflation. So I need 8% more on 110. Correct? Now you know the formula. Nominal rate is equal to, tell me, 1 plus 0.1 into 1 plus 0.08. 1.1 into 1.08. You should do minus 1 so you get the answer in percentage. Should be little more than 18%. 18.8. You get 0.188, which is 18.8%. Understand, if you just add 10 plus 8, it's 18. That 0.8 extra is coming because it's more like cess now. 30% tax, 3% cess. I should not count it as 33% tax. Correct? Because that 3% is. You do not know this because you're all in GST system. Earlier, when there was excise duty and sales tax, this used to happen, tax on tax. If I manufacture and then sell, 100 rupees my base price, first excise duty 10% on 100, then that becomes 110. The sales tax 5% was on 110. People thought it is 5% on 100 itself. So it is actually tax on tax. Same way here also. If it is simply 10 plus 8, it should be 18. Why is it extra 0.8? Because it is not 8% on base, it is 8% on 110. Yeah. One more example 2. Nominal rate 14%. Nominal rate 14%. Inflation rate say 5%. Real rate is equal to question mark. Real rate is equal to question mark. Sorry, 8.57%. Correct? So if you are investing, you need at least 8.57 real rate, and there is inflation 5%. So actually you want 14% return on investment. This is used almost in every chapter. Expectation of shareholders is based on nominal rate, 100 rupee in Reliance share today. After 1 year, I want real rate and compensation for inflation adjustment also. Yeah, this is written as KE in future topics, cost of equity or equity shareholders expected rate. Some books even call it as capitalization rate, KE. Make a note. The nominal rate, notebook, the nominal rate that we are calculating, the nominal rate that we are calculating is the rate of return, expected rate of return of investor. Stop. If we are talking about equity shareholder, if we are talking about equity shareholder, then it is written as KE, cost of equity. Yes. Now from here, don't copy. If I'm a preference shareholder, then it is KP, cost of preference. If I am investing in debenture, then it is KD, correct? But if you want a common formula, then it should be simply understood as K. Depends on what type of your investor you are. You decide whether it is KE or KP or KD. So therefore, in any question, if you see K, understand it is a rate of return expected by the investor. That investor can be anybody, and that number has both real rate as well as nominal rate. Sorry, real rate as well as inflation rate. Understand from here, in many places you will have lot of questions where K is equal to 15%. Now, then don't get this doubt from where they got this 15%. Many places, not one topic. It's there in almost every topic. Yeah. Question number 17. Very small sum. Determine NPV of the project with following information. Initial outlay. So this is your investment minus 40,000. Annual revenue without inflation. That means tell me this is real cash flow. When rate was real rate, cash flow is real cash flow. Annual cost without considering depreciation. Again, even this is without. That means even this is a real cash flow. Useful life, scrap value, tax rate, cost of capital, including inflation premium. When they say including, this rate is nominal rate, but these numbers are without inflation. That means cash flows are real cash flows, whereas rate is I cannot take 12% as discounting rate if I'm counting 40, 30 and 10 as my cash flows, because if cash flows are real, rate should also be real. Understand basic thumb rule. But if cash flows are nominal, then rate should also be nominal. If you're adjusting inflation, adjust in both. DF also after considering inflation, cash flow also after considering inflation. So that means I can do this sum in two different ways now. Tell me which are the two different ways. All cash flows are real, then convert rate also to real rate, work out NPV. Or if rate is inflation adjusted, that is nominal, then convert all cash flows also to nominal, and we should get same answer. We will work out under both. Yeah, start. ACB 17. Real rate is not given in the question, correct? But we have a formula to find out real rate. Previous page. Tell me what is the formula. Real rate is equal to 1 plus nominal rate, correct, by 1 plus inflation rate whole minus 1. Why are we dividing? Because our original formula was multiplication. 1.11 into 1.05, original explanation. Now when it is into, now it has to be divided by. Tell me how much is nominal rate. Nominal rate is the one including inflation. They said 12%, correct? The inflation was only 10%. Now please don't do 12 minus 10 and say 2. I've already explained it won't be 11 plus 5, 16. You have written already 2-3 examples. It's not addition, it is multiplication. So this is 1.12 by 1.1. I think you'll get a very small number. Minus 1 you have done, so that comes to what? 0.018, I think. Correct? 0.01, it is 1.8%. Why I said it should be less? After considering 10% inflation, if you're asking for only 12%, then your real rate is very less. And it can't even be 2%, slightly less, because it is not 10 plus 2 is equal to 12, correct? It's not addition. Now tell me, this rate is real rate. That means your cash flows should also be real cash flows. Real cash flow is without inflation. And good news in the question, all numbers are without inflation. Start now. Now that we have real rate, comma, cash flows should also be real cash flows, that is without inflation effect. Yes. Now go to the question. Initial cash outflow, you keep it aside anyway. That won't have any inflation because it is happening right now. And I'm not even sacrificing. So there's no real rate, there is no inflation, nothing. But other numbers, annual revenue, annual cost, other than depreciation, I have to minus depreciation. I also have tax rate. That means I should first find out CF80. Correct? Computation of CF80. Revenue is 30,000. Without inflation, they said I need without inflation. So no need of any adjustment. Minus cost excluding depreciation 10,000. This will be my PBDT. Correct? I haven't minused depreciation yet. Depreciation, original cost minus scrap value 0 by 4 years. This will give you PBT. Tax rate is 50%. PAT, add back depreciation, you reach CFA. Anyone? Annual CF80 is constant. They did not give you year 1, 2, 3, 4 numbers. So it is same and you will earn it for 4 years. Now using this, I have to find out the NPV. Now understand NPV answer is very easy here. How much is year 0 outflow? Minus 40,000. Year 1, 2, 3, 4, you will earn 15,000. That should be multiplied by summation of discounting factors. At what rate? Will I count 12%? No, 12% is nominal rate. I need the real rate. That's why we did that working note to find out 1.8%. Correct? So outflow minus inflow will give you NPV. NPV is equal to year 0 cash outflow 40,000, year 1 to 4 15,000 into summation of discounting factors at 1.8% for 4 years. Right? So positive 17390. If you are getting late, you can leave. I will have to work out this in one more way. So it may take 5 to 10 minutes. If you want to leave, you can leave. The one who will be sitting can take the photo of the answer and send it in the Telegram group. Anyway, answer will be same. I did everything on real basis. Now I have to do everything on nominal basis. That means everything will be inflation adjusted. Yeah. Heading alternate way. What is the alternate way? Convert all number to nominal numbers. Then discounting factor will also be 12% because even that has inflation. Yes. Start. Convert all cash flows to nominal cash flows. That is inflation adjusted and discount it at, tell me if cash flows are nominal, then you should discount it at nominal rate. Simple thumb rule, real cash flow at real rate, nominal cash flow at nominal rate. Difference between these two is the inflation impact. Now, computation of NPV. Year 0. Now CFAT numbers, I don't think I can write 1 to 4 because there is inflation. Number is going to change every year. Correct? Therefore, it should be 1, 2, 3, 4. Year 0. No confusion. Minus 40,000. Tell me now. The number that you did CFAT, that is 15,000 without any inflation impact. What is the rate of inflation? 10%. Correct? That means end of year 1, it will be 15,000 into 1.1 or simple calculation 15,000 plus 10% inflation. Correct? In Calci, 15,000 into 1.1 will be 16,500. You can write it in two different ways. As 15,000 is this number, CFAT, and this number I got without considering any inflation, correct? But now I have to adjust inflation. If I adjust inflation 1 year later, 15,000 will be 16,500. 2 years later, you can do it in two different ways. You can take 16,500 on that 10 more percent or 15,000 into 1.1 into 1.1. Second year, third year, more like compounding rate. So 15,000 into first year inflation, second year inflation. 1 plus R into 1 plus R should be 18,000 odd. 18,150. This should be around 20,000. 199. Almost 20,000. Same way last year. This is like compounding. You can even do 1 plus R to the power 2, power 3, power 4. 2196. Now these cash flows are nominal cash flows. That means my discounting should also be nominal rate. And nominal rate is already given 12%. Remember that 12% has inflation. No problem. My cash flows are also after adjusting inflation. So both are with inflation effect. Then DCFAT. NPV. This answer should be same as the first way. Due to rounding off, you may have some minor difference. Logically, it can't be different answer. Correct? First way of both at real rate and real cash flow. Now both are nominal rate, nominal cash flow. Sorry, 15,000. Yes. You can work out only depreciation separately. For that, they should give me inflation rate separately for everything. I'll tell you, material inflation 5%, labor inflation 3%. Then I can take depreciation, no inflation. Under SLM, there should be no inflation. But if they don't give me segregation, then I have to consider the inflation for all. I'll show you in the next sum. They have given in the next sum, see the last table. They have given inflation for cost separately, inflation for revenue separately. If they provide the details, then for depreciation, I won't apply the inflation. First of all, depreciation is not a cost. Year 0 itself, you have taken full 40,000 negative. That's only for tax calculation. Why are we minusing depreciation is only for tax calculation. If they give me that segregation, then I can show even depreciation without inflation effect. Is the answer same as the previous one? 17390. But remember, throughout entire finance, wherever you say cost, that is expectation of any investor, it will be nominal rate only. That is, it is always real rate and inflation combination, not plus into 1 plus r into 1 plus r. First r is real rate, second r is inflation rate. Otherwise, you'll get the compensation only for present sacrifice, not for the loss of money due to inflation. Remember, this risk is called purchasing power risk. Though you earn 101, sorry, in our example 111, after 1 year you won't be able to buy 1 kg tomato. You earned more, but there is still a risk of inflation. So you need compensation for inflation risk also. Yes. So wherever, remember this, I know I'm repeating this for the fourth time. Many places you will see this dividend at the end of year 1 and K is 15%. That means shareholder is expecting 15%. Equity share valuation, first discussion itself is price of a share is equal to dividend by K, assuming constant dividend D by K, and this K is what you studied today. Yeah, right. You can try ACB 18 today if you get time, either in office or at home, and I will send out the solution also in the Telegram group. You give a try, but only thing there, here in our question on 15,000 cash flow, we directly applied inflation rate. What they did here, revenue and cost separately given, and then the inflation rate for revenue and inflation rate for cost is separately given. So your working note 1 will be inflation adjusted revenue. Correct? That will be 6 lakh into 1.1. Second year, 7 lakh into 1.1 into 1.09. Last some inflation rate was same, but now it is changing. Third, 8 lakh into 1.1 into 1.09 into 1.08, and one more, that will be 4 lines for inflation adjusted revenue. Correct? Same way, second working note, inflation adjusted cost, and that will be 3 lakh into 1.12, 4 lakh into 1.12 into 1.1. Remember, second year inflation is considering first year inflation also. It won't be today directly second year. In between there is first year. Therefore it is 4 lakh into 1.12 into 1.1 into 1.09. So now what happens in your working note? Working note 1 will be inflation adjusted revenue, 4 line items. Second working note, inflation adjusted cost, 4 line items. Now since these two numbers are inflation adjusted, then your discounting rate should be nominal rate, correct? It can't be real rate. And then you have to work out NPV table, year 0, 1, 2, 3, 4. This revenue first year minus this cost, second year revenue, second year cost, and so on. And then when you multiply, you have to multiply this with discounting factor at nominal rate. And do we have nominal rate in the question? Yes. After first table they said tax rate 60. Okay, tax rate is given, so you'll have to first do the CFAT calculation. And then they said cost of capital 10% including inflation premium. That means you can directly DF at 10%, and then you get the NPV answer. To check whether you have understood the concept or not, you can try this sum at real rate. Then no question of considering any inflation. That will be much faster. But then in that case, you have to first work out real rate. 1 plus nominal by 1 plus inflation whole minus 1. Yeah, give a try. I will send out the answer also today in the Telegram group. Anyone here who is yet to join Telegram group? Okay, you have given your numbers. No, for joining Telegram group, it's not email. You have to open Telegram group. You would have got an invitation request to join. They're sending a link. Oh, okay. So no problem. I'll then ask them to add all of you. I'll send the solution today. You can check once you practice. Yes. All right. From tomorrow, you get volume 2 material. Ashim sir will be taking class for a couple of days from tomorrow, and you keep a separate notebook because that is for volume 2, and I think he'll be starting with forex chapter from tomorrow. Yes. Thank you so much. Bye bye.